In vaults beneath Shanghai, Beijing, and Shenzhen, a quiet revolution is taking shape, one not of missiles or tariffs, but of metal. Gold, the oldest money on Earth, is at the center of a new power play between China and the United States. While America flexes tariffs and treasury bills, China is stacking something it can hold in hand. And behind the scenes, it may be building a system that fuses ancient wealth with modern code, a blockchain network where gold isn't just stored, it's tokenized, verified, and traded like digital currency. Welcome to FluxFolio Finance. Today, we explore how China's relentless gold accumulation and the idea of a gold-backed digital system could shift the global balance, and what that means for every investor, every government, and every dollar on Earth. The numbers behind the shine. Let's start with the numbers, because they tell a story older than any speech from Washington or Beijing. The United States still holds the crown, about 8,133 metric tons of gold, the world's largest official reserve. Nearly half of that sits behind the concrete and steel walls of Fort Knox, Kentucky. About 4,180 tons, worth roughly $589 billion at today's price of around $4,000 an ounce. China officially reports about 2,298 tons of gold, but that's only what's disclosed. Analysts who track import flows, mining output, and central bank purchases estimate that China's true holdings may exceed 5,000 tons, more than double the official number. Add its allies in BRICS. Russia, with around 2,300 tons, India, with 822, Brazil, with 130, South Africa, with 125, and you're looking at over 6,000 tons combined, or about 20% of all the world's official gold. Now, look at the flow. In 2024, China imported 1,383 tons of gold, or $100 billion in total. Imports from Switzerland, Hong Kong, and Africa flood every month. This isn't random accumulation, it's a deliberate repositioning, away from the dollar, towards something tangible. Why gold? Why see now? For Beijing, gold isn't nostalgia, it's insurance. The trade war, the tech war, and now the Mar-a-Lago Accord of tariffs have shown one thing clearly. The dollar is not neutral. The US can weaponize its currency, sanction its rivals, and freeze reserves overnight. When Washington froze nearly $300 billion in Russian reserves in 2022, every nation took note, and China took action. By buying gold, Beijing is building what some call a shadow reserve system. Gold can't be seized electronically. It sits outside SWIFT. It settles without permission. It's the perfect hedge in a world where finance is power. But the strategy isn't just about stacking metal in vaults. It's about making gold liquid again, turning it from a static asset into a dynamic weapon. The gold blockchain vision. Here's where the story takes a futuristic turn. Imagine a digital network where every bar of gold, stamped, verified, and numbered, exists as a token on a blockchain. Each gold vault acts like a node, confirming transactions in real time. Ownership can be transferred instantly, transparently, and globally as suits, without passing through dollars or Western banks. There's no confirmed evidence that China has launched such a system yet, but patents, pilot projects, and government-backed blockchain initiatives all point in that direction. China's digital yuan, already running through its central bank's network, provides the architecture. Combine that with the Shanghai Gold Exchange's vast reserves and the government's push for blockchain infrastructure, and the puzzle pieces fit perfectly. If realized, this would be a decentralized gold settlement system, Beijing's long game to challenge dollar dominance not by confrontation, but by innovation. The geopolitical equation. So, what happens if this system comes to life? First, it gives China and the BRICS bloc an alternative to the US-controlled financial web. Instead of settling trade in dollars, nations could trade gold-linked tokens, redeemable for physical metal, stored across a network of verified vaults. Russia sells oil to India, gets gold tokens in return. Brazil trades soybeans to China, settles in digital gold instead of US treasuries. The result? A parallel financial universe, backed not by promises, but by tangible reserves. And while the US still sits on more gold than anyone, America doesn't use it. Its reserves are locked, static, and valued at the outdated statutory price of $42 an ounce, a relic of the 1970s. If China's system makes gold move again, the psychological shift could be seismic. For the first time in decades, money would have substance, and the East, not the West, would define its rules. But can it really work? Here's the catch. Gold-based systems sound stable until you remember history. Under the Bretton Woods system, currencies were pegged to gold until the US broke the link in 1971. Why? Because the world's demand for dollars outgrew America's supply of gold. Today, global trade is far larger, and total above-ground gold is only about 208,000 tons, barely enough to back even a fraction of world money supply. If the world went back to gold, prices would have to skyrocket, perhaps $10,000, $20,000, or more per ounce to make the math work. That would enrich gold holders, especially the US Treasury and BRICS nations, but it would also inflate commodity prices, distort credit, and slow growth. And remember, the US still holds the biggest stash. Any massive revaluation of gold ultimately benefits Washington too. In that sense, the gold race could backfire. China's buying spree might lift America's balance sheet more than its own. So yes, a gold-anchored digital system is possible, but whether it's sustainable in a world that runs on debt and speed, that's another question. The shadow reserves and the silent shift. Behind the official numbers lies an invisible tide, shadow gold. In China, private citizens and state entities have been buying gold quietly for years. Jewelry demand, industrial use, and unofficial central bank channels all add up. Some analysts believe another 2,000, 3,000 tons could be sitting outside formal reserves, gold that can be mobilized in a crisis. Across Asia and the Middle East, the same pattern emerges. Russia, after sanctions, switched from dollar assets to gold. Saudi Arabia, the UAE, and Iran joined BRICS talks centered on settlement alternatives. Even Singapore and Malaysia are increasing bullion reserves. It's as if the world is quietly preparing for a post-dollar era, one bar at a time. And this isn't just about economics, it's about control. Gold is trust embodied, and in a world losing trust in paper promises, that means power. America's response. So what does the US do? For now, Washington isn't buying more gold, it's buying time. The US dollar remains the world's reserve currency, and America's network of allies, financial markets, and military power still anchor the global system. But subtle signs show the US isn't ignoring the shift. Fort Knox has undergone new audits. The Treasury has hinted at modernizing gold accounting. Some voices in Congress have even floated revaluing gold to reflect market prices, a move that would instantly strengthen America's balance sheet by trillions. And in the digital realm, the US is exploring tokenized treasuries, letting investors hold digital US debt on blockchain, a counter to any gold token challenge. It's a 21st century standoff, gold tokens versus digital dollars. The future of money. So where does all this lead? Maybe not to a gold standard, but to a gold influence. Gold won't replace the dollar, but it could reshape how nations hedge against it. A digital gold network would give China leverage, prestige, and resilience. A revalued gold reserve would give the US strength, liquidity, and credibility. And in between, investors would chase safety in both, from bullion vaults to Bitcoin wallets. This is not the end of fiat currency. It's the beginning of a new hybrid era where metal meets code and the oldest form of money fuses with the newest. The world isn't going back to gold. But gold, and perhaps its digital shadow, is coming back to the world. China's accumulation, America's reaction, and the race to tokenize trust itself all tell the same story. The next financial revolution won't begin in a boardroom. It'll begin in a vault. This is FluxFolio Finance. If this story expanded your perspective, like this video, share it, and drop your thoughts below. Is China's gold-backed system the future, or just a glittering illusion? Until next time, stay sharp, stay thoughtful, and stay ahead.